Hi, I'm Realtor Bert today. I'm also broker owner of Santino Properties LLC, bringing you another educational video in a series I like to call Sipping Coffee or Tea with Realtor Bert today. Hopefully, you found these educational videos interesting, entertaining, and they're meant to be a resource, of course, to the public regarding the many facets of our real estate industry. So this is going to be a four-part video series talking about financing and mortgages. So let's dive into the very first video, which is types of mortgages that are available to you. So the first one is a fixed rate mortgage, right? So the interest rate is going to remain constant throughout the life of the loan, which is going to provide predictable monthly payments. So the terms of these loans are going to vary between 15 years, 20 years, and 30 years. Now, the longer the term, the higher the rate. The lower the term, the better the rate you're going to be able to get, right? So I refinanced at a 15-year mortgage during the pandemic, and we did pretty well. I don't even want to tell you what that interest rate is because it's a really, really good interest rate, and I don't think we'll ever see that again, frankly. It's in the twos. I was able to basically do the same payment as my 30-year fixed rate monthly payment for that fixed rate 30-year mortgage, and the interest rate was so low that the payment remained the same, basically. But I'm paying it off in half the time, and you should just see an amortization schedule and through a loan calculator. The amount of interest that I saved over the life of the loan. So if you have any questions about that, feel free to reach out to me and ask me, hey, can you run some numbers for me as far as this loan that I'm looking for? Now, I'm not licensed in lending, full disclosure, I'm licensed in real estate, right? I'm a broker. However, I like to be a resource to the public, as you can see. So I'd be happy to either answer whatever questions you have, and if not, of course, pass you on to Pat Fitzgerald, who is my lending partner, right? He's just awesome. He's a residential mortgage loan originator, and he's really good. And we're going to be talking in just a moment about VA loans and Texas vet loans as one of the other types of financing. And I want you to know that he's an expert on that. That's how we met. But more about that. So the pros to this fixed rate mortgage is that you have stability and predictability, which is going to provide for you easier budgeting. And the cons are typically, they're going to be higher initial interest rates compared to adjustable rate mortgages. And we're going to talk about that second, which is an ARM, right? An adjustable rate mortgage. These are going to be interest rates that change periodically based on a benchmark or index, plus a margin. So the terms are typically going to be the initial fixed rate periods of 3, 5, and 7 to 10 years. Right? After which the rate adjusts annually. The pros on this is that you have a lower initial interest rates and payments. The cons, I'm going to tell you a story about this, are the rate and payment can increase significantly over time. And then there's a higher risk involved, right? So if you're a conservative guy like me, and you go back to 2001, I think, when I bought my first house. I was early 30s. And never forget this guy. We'll call him Steve, right? It's not his name. I'll never forget this guy. He was a real piece of work. And here's why. Because he was trying to push, I felt he was trying to push this ARM, right? This adjustable rate mortgage. And I would ask him, Steve, he was like, well, why wouldn't you want an adjustable rate mortgage? It's lower terms, it's lower initial fees, it's lower, monthly payments. The fees are a little bit better as well. But it was mainly the initial payments were a lot lower. And I said, okay, yeah, but what's my payment going to be next month? Well, it probably won't change. And I was like, probably. Why probably? Well, it's never changed before. And I'm like, okay, well, something's cool. I said, what's my monthly payment going to be a year from now? Well, I don't know, but it's never changed before. What's my rate going to be, or my monthly payment going to be 5 years from now? Well, I don't know, but it's never changed before. I said, no. sign me up for the fixed rate mortgage, right? The first one that I just talked about. Are you sure? Because, well, turns out, hindsight's 2020, right? But it turns out this guy Steve was trying to get me into an adjustable rate mortgage because they were incentivized back in those days. We're talking about 2001, right? They were incentivized to push those mortgages because they were bonused on them. And guess what? 7 years later, just like I said, what happens if the rate goes up and then it affects the monthly payment? That's exactly what happened. And the indexed rate changed, right? Plus the margin or whatever. So it really shot a lot of people's payments up, and they couldn't make the payments anymore. And that's what led to the housing crisis. One of the things that led to the housing crisis in 2008, right? There's a lot of predatory lending. I'm not saying that Steve was a dishonest person. I just felt like it was kind of predatory, right? He was kind of really pushing me into that adjustable rate mortgage product. Listen, if you like to save some money, we all do, check it out. I'm not saying not to get an ARM, just do it very cautiously, that's all. Third type of mortgage is an FHA loan, right? Federal Housing Administration, right? That's going to be a government-backed loan, and it's insured by them, and it's a Federal Housing Administration, and is designed for low to moderate income buyers, right? It's a great first-time home buyer program, and you'll find that there's going to be a lot of flexibility in terms of the DTI, the debt-to-income ratio. They'll let you get up a little bit higher than if it's going to be a conventional loan, right? We'll talk about those in just a minute. Down payment is as low as 3.5% to get into the home. Here are the pros, right? You have a lower down payment requirements. Again, more flexible on the credit qualifications. Again, the DTI can be a little bit higher, the debt to income ratio. How much do you have coming in? How much do you have going out each month, right? That's the correlation between the two gives you that DTI, the debt to income. Now, the cons, of course, are that they're mandatory mortgage insurance premium, MIP. Okay, so, and those loan limits are going to be based on the region. For example, if you ever see a home which is priced higher in Bexar County in 2024 than $557,000, chances are that it is not FHA eligible, because those are the loan limits for Bexar County, Texas, right? So if you see that they're offering or accepting FHA financing, plain and simple, it's a mistake which is made by that listing professional, quite frankly, because FHA limits in Bexar County, Texas are $557,550, something like that, right? So $558, right? Say rounding it up. So that's it. Those are loan limits, right? Now, remember that mortgage insurance premium never goes away. Okay, so you're going to pay that for the life of the loan. If it's a 30-year loan, it's going to be there for 30 years. Now, the fourth type of loan type I'd like to talk about are VA loans. So again, a government-backed loan. It's available to veterans, either active duty service members, certain members of the National Guard and Reserves, and of course active duty, right? And they're guaranteed by the Department of Veterans Affairs. So, and former military as well, right? As long as you had not a dishonorable discharge, you should have no issue getting into a VA loan. Now, here are the down payment requirements. We talked about 3.5% for FHA. Well, this one is no down payment required. You can go in at 100% LTV, loan to value, right? So you're financing the full amount. My clients are under contract to buy a brand new home with me. It's brand new construction, and you should see the goodies that they got for this new construction home. Under VA, right? My client is a very, very nice gentleman. He served in the military for 26 years in the Army, and his wife is also a veteran, right? So we'll be selling their primary residence. I helped them buy 9 years ago. and we'll help them buy this brand new home. Should be probably sometime in December, but it was an inventory home, right? And it was sitting already built. Just have some finish out stuff to do, but they got a great rate. And we're going to talk about another VA loan type, right, for veterans in just a minute, Texas Vet. We'll talk about that in a minute, but I mean, honestly, there's no down payments. He went in 100% LTV, and he got we got the builder to throw in some goodies such as closing costs, right, for contributions to cover closing costs, right. So the pros are there's no down payment, and there's no private mortgage insurance, PMI, like we talked about with FHA, and they're competitive interest rates. The cons is that there's typically a funding fee required. It can often be financed into the loan, I'm pretty sure, and there's some eligibility requirements. However, I can tell you that if you have a 100% service-connected disability, that's your status, then there's no funding fee. Let's move to number 5, which is Texas Vet, right? So Texas Vet is basically, it's short for Texas Veterans Land Board, Texas VLB, okay? My lender partner, Pat Fitzgerald, is recognized by Texas VLB as one of the top lenders in the state year after year after year. So he's an expert on Texas Vet and VA, frankly, right? He works with a lot of veterans, which is great because he takes really, really good care of them, just like we do here at Santino Properties, right? Because my dad served in Vietnam, and he probably served, he was a Green Beret. So I love to take care of my veterans. Although he's no longer with us, it reminds me a lot of my dad, right? Working with veterans. And love to show them that respect and serve them at a high level to thank them for their service. So Texas Veterans Land Board, again, it's through VA. So it's going to be guaranteed through VA. And there is a funding fee, just like VA. However, it can be waived with that service-connected disability. If you have any questions about that, reach out to me so I can connect you with Pat Fitzgerald so he can tell you a little bit more about Texas Vet, because that's specifically for Texas veterans, right? And it's a tremendous program because the rates are even lower than VA. That's right. So if you have a service-connected disability, let's talk about that because it's even better rate. So number 6 are conventional loans, right? So a lot of the fixed rate mortgages that we talked about, 30, 20, and 15-year terms, they're basically conventional loans, right? And it's not insured or guaranteed by the government, and they have to be conforming loans and meet the Fannie Mae and Freddie Mac guidelines. It's a down payment as low as 3%, although you typically see it at 5%, right? They're going to ask you for 5% down. The higher the down payment, the better the terms are going to be also. Now, the pros for these are the potentially lower overall costs compared to government-backed loans that we've just talked about. And there's some very flexible terms. They're also not going to be as picky about the property type. They're not going to be flagged by appraisers, for example, who wear a couple of different hats when they're doing the VA and FHA loans, especially VA. VA is very picky. So they take the appraiser hat off and they put on kind of not an inspector hat, but they're qualified, right? They're trained to do those government-backed loans. And if they have anything at all that is deficient in the home, such as no flooring, like it's just raw concrete, doesn't meet VA standards. The fascia boards, you see some raw wood, like it's not all painted one uniform color, no paint throughout. I took a listing once. I told the gentleman, we really should paint that. It's going to get flagged as a lender required repair under VA. If we get a VA buyer, well, guess what? We got a VA buyer, and guess what? It became a lender required repair that we couldn't close until they went and painted the fascia board, right? And you have to pay the appraiser to go back out again. It's like $150, $200 to go back out and just say, with his clipboard, and say, you did it, so you remedied the situation. Okay, let's move forward. Let's go to closing. In the meantime, you're out $200, right? Can't ask the seller to pay for that. You're probably gonna ask the seller to pay for that. Can't ask the buyer. It's not their fault that your house wasn't up to snuff. So anyway, it's a point of negotiation. But either way, it's just the cons. Let's talk about that real quick about the conventional loans. Is that there's stricter credit and income requirements, because that is the case, and there's typically higher down payments that are often needed. Now, here's the really cool thing about conventional loans that I want to mention, is that if you have an 80-20 LTV, once you reach that threshold, that's loan to value, your loan is at 80%, but your value, what you have as equity in the house, is 20%. You've reached that 20% mark, and you're working with me. Reach out to me. Just call 210-376-TALK, right? Reach out to me, text me, whatever, and let's do a quick analysis on your house, because guess what? Your lender is not, or servicing company is not going to just automatically going to take that PMI off, right? So it's MIP with FHA, and it's and VA. It's excuse me for FHA, but it's PMI, a private mortgage insurance, and you can take that mortgage insurance off, right? You're no longer a risk to them once you've reached 20% equity threshold. But they're not going to just automatically take it off. A lot of people think they just automatically, and oh yeah, it's done. They're not going to charge me PMI anymore. No, you have to make a request with them. But how do they know what you're at? I know where you're at because I have the data, right? The empirical data to support a claim that, hey, look, I've already reached a 20%. I have 20% equity in my house now. Reach out to me. Let's take a look at that. I'd be happy to. This is as good a time as any to ask you to like the channel, subscribe to the channel, sign up for notifications for the channel, share my videos. It's always helpful to have that support, so thank you for that. The last one I'm going to talk about is number 7, that is USDA loans. So the overview is that it's designed for rural and suburban home buyers, guaranteed by the United States Department of Agriculture. So it is a government-backed loan. The cool thing is that no down payment is required. It was set up as USDA, same people that inspect our meat, but it was designed to enhance the lives of rural America, those living in rural America. So that's at USDA, and there is a map. Reach out to me for specific property eligibility. I know where to go to find that. I can help you out. Again, 210-376-TALK. Just reach out to me. Text, old-fashioned phone call, send me an email, bert@santinopropertiesgroup.com. I'll be happy to help you out with whether or not a property is, in fact, USDA eligible. There are some, I don't even think they're suburban. They're frankly urban areas in San Antonio that I'm aware of, that almost every property I've ever looked up is USDA eligible. Don't ask me why. It's densely populated, but man, if you can get into a house with 100% financing, not a bad deal. The pros on the USDA loans are that no down payment is required. Again, competitive interest rates, just like all the government-backed loans, right? And there's low mortgage insurance. Okay, so you got low mortgage insurance, but it's lower. The cons, again, geographic and income eligibility requirements, and there is a funding fee. So that's it for now, right? That was our first video, financing and mortgages. So hopefully it's been interesting to you. Again, like the page, share my video. Feel free to reach out to me with any questions you might have. Because we believe that by understanding these aspects of financing and mortgages, then potential home buyers and homeowners can make informed decisions that are going to best suit their financial goals and, of course, their financial needs. So hopefully you found this interesting. Once again, this has been the first video in the series for financing and mortgages. I'm Realtor Bert. I'm broker owner of Santino Properties, LLC, a boutique firm helping our buyers and sellers win in this competitive San Antonio, Texas marketplace through the unique and effective use of marketing. And this has been Sipping Coffee or Tea with Realtor Bert. Be sure to like the page and the YouTube channel, and feel free to reach out to me with any questions you might have. Thanks for watching.